Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Tuesday, February 26, 2013. Well, a continuation of the trend to the upside today. A candle has made a higher high and a higher low, and a fairly large white-bodied candle. Decent bullish momentum in this market at the moment. The large body represents, and the large white body represents the buyers making a significant amount of net bullish progress on the day between the open and the close. And the good thing about this candle as it stands in comparison to the previous three is that even though we had white bodies, we've seen a nice extension of the size of the bodies as this trend has developed, and that does suggest a fairly healthy trend to the upside. So let's be aware of that some good upside solid momentum means that this trend is healthy and the buyers are in control of this market at the moment. The buyers have closed up towards the high, suggesting that they've got fairly strong control, but they did lose some commitment as they tested around this 1620 level. We can see here on these two previous candles that there was price rejection from there, and that does suggest that there is a possibility of this market trading down from here, so we do need to be aware of that. I think we also saw the influence of the 1625 level of resistance. It has been an important level in the past, previous support and resistance, and just recently here we saw the market bounce off there in a significant way, and the buyers coming in solidly. So there is potential for that now to act as resistance for this market. We are seeing the influence of that. Also perhaps seeing the influence of the Kijun-sen around that area too strengthens the resistance there. So any rally for this market to continue rallying, we will need to see solid strength from the buyers to trade through that area. Now, we did have a flat Kijun-sen, and that was why we saw the price action being attracted back towards there. Very often when we have the flat Kijun-sen, price action is attracted towards there, and that's what's been happening there. So now that we are seeing the influence of the resistance coming in there, we could see the market test down to lower levels, and if we do, we have solid support down around the round number 1600 level. Previous support here on two occasions didn't follow through as resistance when we saw today's candle trade through there in a strongly bullish manner, so it does negate that to some degree, but it should act as a some sort of a barrier to this market. We then also have solid support down around the 1577 level, and then down to 1559. Very strong zone of support extending down to 1523. We saw very strong price rejection within that zone previously, and it is a significant area. Previously here we saw that's where the market has rallied from over the previous week or so, after we saw this very solid bearish sell-off. Now, in terms of the Fibonacci extension, we're examining the current first time frame uptrend that the market's in compared to the previous time the market was trending up, and it was only a one candle uptrend previously. So obviously we've seen the market trade through the 100% level and through all of the significant levels, and it does suggest that we have a very strong uptrend at the moment. And today the market took out the 261.8% level in a decisive manner. The market is now interacting with the 423.6% level, which coincides with the resistance level and the Kijun-sen. So that is a very, very strong level around this 1622 level or so. So potentially strong resistance there. We don't know if it will act as resistance. We need to watch how the market plays out around that level. If we do see sellers come in, then there is good potential for a change of trend to the downside. But if we do trade through there in a bullish manner, there is solid potential for the market to test up to the 685.4% level, which is the next level, and that coincides with where the cloud's trading. So that will be very, very significant resistance to this market if it does trade up there. In terms of the Fibonacci retracement, we're examining the relationship of the current first time frame uptrend to the previous time the market was trending down in the first time frame. And here today we saw the market trade in a very solid bullish manner through the 50% level. We saw the market close at the 38.2% level for the previous day's trading, and now we're seeing the market trade to the 61.8% level. It tested up above there and was rejected from above the 61.8% level. It does hint that there is a possibility of a change of trend. But reading the short-term dynamics in this market, the buyers are still strongly in control, so there is no hint that we will see the change of trend around these levels. If we do see the market rally through there, the 78.6% level comes into play, 1633, and then up to 1655 at the 100% level, and the next level then is above the cloud. Unlikely that we will see the market trade up through there in a hurry, and we will need to see quite a change in sentiment to see the market trade through the cloud over the next few weeks. In terms of Ichimoku, we have a market that's remaining bearish in the long-term time frame, so that bearish bias remains because we're trading below the cloud. We also have a bearish market in the medium-term time frame by trading below the Kijun-sen, the pink indicator here, but now bullish in the short-term time frame by trading above the Tenkan-sen, and we've done that in a strongly bullish manner here. So a change of sentiment in that short-term time frame. Previously we saw the market oscillating above and below the Tenkan-sen and the Kijun-sen, then selling off with the sellers taking control, trading through some significant support areas in a strongly bearish manner, and then trading consistently down below the Tenkan-sen with that indicator acting as resistance, but now a change of sentiment with the buyers taking control. So it will be important to see how the market plays out. This 1625 level of resistance, a very, very important and solid area. If we do see a continued bullish trading up above there, then potential for the market to trade to higher levels, but if we do see a sell-off and a test down to 1600 and a close down below there, we could easily see the market trading back down towards this highlighted yellow zone.